Starting with MMI, which was formed from the merger of Momentum and Metropolitan in 2010.
Right, and it's got all the usual insurance, employee management, benefits, healthcare administration. They're also Wayne McCurry's employer, so that's going to be interesting. Market cap?
36.3 billion rand, price to earnings ratio of 12.5, dividend yield of 6.7%. Good dividend payer.
Yeah, look, this is not a solely South African company. It has got some interests overseas and we're expanding it, but it is at the end of the day probably the most South African focused other than Clientele. It's got the highest dividend yield of all. Now, as I've said, all the other companies, saturated market, difficult to grow. You know, maybe Momentum has still got to expand its big overseas interests, but the real thing here is a 7% dividend yield. When we look at the share chart, you'll see the share has come off quite significantly.
The share has come off significantly. In fact,
and the other thing that I remember about MMI is that unlike some of the other insurers, it tends to be quite conservative with its provisioning and with its statutory capital management. Yes. It looks more at bonds, and that should be beneficial in an environment where the market's taken.
The shareholders' assets are invested very differently to the other life companies. They're kept in very short-term assets, which stands you good stead in market weakness, and it gives a lot of predictability to the shareholder returns. And also you've got to just simply keep less capital. So the one thing, in this common knowledge, there's no problem, fully capitalized business and probably a little bit of excess capital. So you buying it at a 6-7% dividend yield that even in adverse conditions won't be under threat, and I think that's reasonable value.
Hot or not?
I'll go on this.
Hot or not?
Yeah, again, for me it's a sectoral call, being positive about the market outlook, thinking these stocks are all sold off too much. So hot for me, yes.